I can't believe I'm going to say this, but it is time to buy options. Never on my channel have I recommended buying options until today. There's a very specific reason that I'm going to cover in this video today on how you can make money in this unique opportunity in the market right now. And basically, the reason why it's time to buy options is because the market has a clear momentum trend. Typically, the market is not that obvious. It's typically going sideways, but right now, if you actually take a look at the market, it's going up like crazy, but it's really weird because implied volatility is very low, meaning that premium is not that high. And I haven't really seen this since 2020. What's going on right now is basically this. Implied volatility is very low, meaning that premiums are very low. So selling options is actually not profitable. Now, I'm an advocate for selling options and making consistent weekly income. But in this period right now, it actually doesn't seem that profitable to be selling options. I've had a few losses lately, and I've realized that right now, it's just a bad time. Because if you look at the market overall, it's like a herd of zebras, and there's two lions chasing these zebras, and we really don't know when that's going to stop. Because people are driving the market. The market moves up and down based on the Fed, of course, which we've recently seen they've increased interest rates. But essentially what's happening is a lot of people are getting excited and they're buying up stocks. And that's what makes the stock market move up really quickly. And a lot of people are buying, and that creates a momentum swing. And basically, this is what happens. The market either has a lot of buying pressure, right? And it's just going up like a straight line, or it has a lot of fear and a lot of people being afraid and just selling off. And that's why the market is always overreacting. It's either moving up like crazy or it's going down, a whole lot. And that's not really a good thing if you're going to be selling options. Because when you're selling options, which I absolutely love doing, and that's how I've been making consistent weekly income, since I was like 19 years old, I started trading options, and it's completely changed my life. Like, I made so much money, but this year so far, although I'm still up in January and I had a really good month, I'm actually not up as much as I'm usually up in the beginning of the year. Typically, I like to take advantage of January effect and, basically sometimes buy options or just be in positions that are going to have my portfolio increase by a lot. And my portfolio has increased, but I've also had some problems with call credit spreads. And specifically, I just realized the problem is the market is going to be continuing to probably move up really quickly or move down really quickly. And that's not a good environment to be an option seller for call credit spreads or heck, even put credit spreads. The reason being is even if the market is high and is likely to continue doing so, when it eventually corrects and goes back down, it's called mean reversion. It's going to revert back to its mean, back to basically where it's supposed to be trading at. It's going to have a sharp decline. I don't know when that sharp decline is going to happen. Anyone that says the market's going to crash is completely lying. I have no clue. I can't tell the future, but what I do know is that we're going to have a violent move at some point that's going to correct downwards, because right now, if you take a look at the RSI in the market, it's completely overbought. Now, it is normal when the RSI is overbought that it can continue to be overbought more, but when it eventually corrects, we're going to see, potentially decline of 5 to 10%. And for that reason, I am not going to be doing any selling options at the moment. I don't want to sell iron condors. I don't want to sell call credit spreads. I don't want to sell put credit spreads. None of those three strategies are likely to be profitable in this market environment. And in this market environment, because of the greater momentum, what I'm going to be doing is I'm actually going to be buying options. Now, I'm going to be completely honest. I'm very good at selling options. I've been doing it consistently for a very long time, going on a decade. But actually, I'm not used to buying options. When I used to buy options, I would buy call options, and it honestly did not go that well. It seems like a complete gamble because when I buy a call option, if it's out of the money, I'm going to lose more often than not. If it's an in the money call option, that's good, but they're very expensive and they have not been consistent in my experience. But honestly, I have no choice. I need to adapt. You need to adapt to the current market environment. And if you want to make money, there's pretty much only two ways to do that right now. Number one is actually going to be buying options, whether it's a call option that you're buying, or if you're bearish, you can buy a put option. And honestly, I won't blame you if you're bearish because the market is completely overbought in the short term. So if you want to buy put options, I think that's smart. The other two strategies that I would do is buying bull call spreads. basically that's where you're buying one call option. You're basically betting the stock market will go up, but then you're also selling another call option that's higher. So for example, let's say that you buy a $160 call option on Apple, okay? That's going to be fairly expensive. Now you can subsidize this buy call option by selling a little bit higher at the 170 call option. So basically you're paying for the 160, but then you are selling the 170 and collecting some premium, which is going to be a bull call spread. And a bull call spread has the advantage over just buying a call because it is much cheaper to get into that position. So in my opinion, bull call spreads are superior to just buying call options currently, especially if you have a smaller portfolio. Because a bull call spread, oftentimes rather than paying $1,500, you can just pay maybe $500. So you can get basically 1/3 of the cost of a call option by going with a bull call spread. Now, the detractor or the negative of a bull call spread is that you are capped. So for example, say you buy a 160 call option on Apple and then you sell a 170. Your maximum gain in this situation is just going to be 160, 170. The difference is going to be $10. Since each option is 100 shares, 10 times 100, that's going to be $1,000. So basically, that is going to be my go-to strategy in this current market environment. And the second strategy is going to be actually put debit spreads. I'm not a fan of buying puts, but in this market environment, I do think that you can kill it because if the market just pulls back one day, no one's really expecting this right now. The implied volatility is super low, meaning that options are cheap to buy. So if you buy a put option, it's very similar to actually a bull call spread, except you're going to buy a put at 150, right, for Apple at 150, and then rather than having to pay upfront for that whole 150 put option, you can buy the 150 and then sell the 140. The 140 is going to subsidize the cost of buying that 150. Therefore, these two strategies are probably best right now for growing a small portfolio, and they're specifically going to make a lot of money for the next few weeks. I don't know when the momentum trend will stop. For example, when the lion gets tired, he's going to stop chasing the zebras, everything's going to calm down. But right now, we're pretty much in that lion chase where that lion is just running at full speed. He's going like 30 miles per hour. He wishes that he was a cheetah. He's not a cheetah, but he's running 30 miles an hour, and the zebra is like running at 35 miles per hour, and that's the market right now. We don't know when this is going to calm down, but I would say for the next few weeks, it's actually smarter to buy options, and I can't believe I'm saying this. I can't even believe I'm making this video, but if you buy options right now, it's going to be more profitable than selling options. And I would say, why not? If you can put in $100 and get $200 or $300 out short term, that is worth the risk. Although buying options is more risky because inherently, whatever you pay for that option, if it doesn't go your way, you can lose, completely your entire premium. But if it does go your way, you're going to double, triple, maybe even put $100 in and get $500 out. So if you can 5x your portfolio or 5x a few positions in your portfolio right now, I would say the risk is worth it. Now, I wouldn't do this with your entire portfolio, but I would say right now, it makes sense to probably put 20 to 30% of your money in buying strategies. Now, I'll be honest with you. The third thing, besides buying options right now, is just literally going more into cash, liquidating some of your positions, taking a gain, because the market is basically up. It's like Mount Everest. It's at the very peak. It might go higher. Mount Everest is a very big mountain. It's one of the biggest mountains of the world, if not the biggest. It can keep going higher, but it's unlikely to do so unlimitedly, right? The market is not an unlimited game. It does mean revert, meaning that whatever the average is, it's going to go back down towards the average, okay? So right now, what I would be doing is cashing out on some of your positions where you have a really big gain, then using some of that cash to buy options, and honestly, just having more cash in your portfolio to spot better opportunities. Because with this huge momentum, there's going to be more opportunities in the market for swing trades, short-term trades. And honestly, I'm not a short-term trader or a swing trader, but you kind of have to be sometimes. You have to adapt to the market. If you're not adapting and sometimes trading your strategy, and making it a little bit different and mixing it up, then you're not going to get the best results, because not one strategy can work all the time. Just like nothing ever 100% always works all the time. There's always going to be some variation in life, and right now in the stock market, the best thing that you can do is mix things up and start buying more options. And one last thing is, it's kind of crazy, but I actually think that Cathie Wood is going to do really well in 2023, because all of these stocks that are jumping up a lot are in the tech space. They're high growth stocks. So this is looking very similar to late 2021, where basically any single stock was going up like crazy, like Zoom and all of these other high flying stocks with high price to earnings ratios, high price to sales ratios. These are typically the stocks that I don't like, but honestly, I can see them doing really well right now. And I can see some of the stocks that Cathie Wood is going to have in her portfolio doing really well. We already see this with Tesla. Tesla was like a $100 stock basically, and now it's basically a $200 stock in just the past 35 to 40 days. It's really insane to see Tesla up so much, especially because this stock was not doing well for a very long time. But now I can see the stock continuing to run up. So maybe I would buy some call options or bull call spreads. Or vice versa, I would be taking profit at these times and then putting that money in other risky plays. I really can't believe I'm saying this, but right now, risky plays make sense because implied volatility is the lowest I've literally seen it, and the premium is tiny. So selling options is just not worth it, because when you sell options, you want implied volatility to be higher for you to collect more premium. But now, because there's not that much premium, I'd say, for the next 1 or 2 weeks, we'll see what happens. Stay subscribed to this channel. If you're not subscribed, make sure you do subscribe, because I'm going to update you if it's a good time to keep buying options or to start selling options.